S&P is on track for its best January in more than 25 years. Futures popping higher after 25 European countries sign on to tighter fiscal discipline, and investors wait for Amazon earnings after the closing bell. I'm Alix and the Morning Call starts right now.
Good morning, I'm Scott Redler, Chief Strategic Officer of T3Live.com.
And I'm Alix with TheStreet, and together we bring you the Morning Call. All right, Scott, we have the S&P heading for its best January in about 25 years. And when the S&P is up in January, usually we're looking at double-digit returns for the rest of the year. So how important is this day?
Usually I get a little hesitant when I hear something like best in 25 years, because that calls for you to take some profits. But I do think that this year is going to be a little bit different. I think that this January is a good indication, or hopefully it will be a very good indication on the type of action we have for the year. I think traders are very happy with what we've seen over the course of the last 4 to maybe 6 weeks, ever since that December 20th gap and go. We've had sector rotation, we've had some healthy breakouts, we've had viable dips, you've actually even had some cute shorts. So I think a lot of traders had a really good month going with the trend. So if we could even just get like 50% of the performance or not even fall apart in February, I think that would be very constructive.
So do you think that there's enough of a cushion if we see traders come in February and take profits off of that good January? Because on average, since 1972, the S&P has been up 1.5% in December, just over 1% in January, and then negative in February.
Well, I think the correlation of one has been broken. So even if we pull back a little bit or only go up 1%, I think it's still going to be a stock picker's game. So traders are going to be able to find the relative strength, the best pattern. So I still think we're going to have a lot of action. So what we're going to continue to do is we're going to monitor those two trends, the longer term uptrend to see if that gets tested, and then the accelerated one. So let's go right to the chart so I don't blabber. Here you go. This is the longer term uptrend. This is the one that started in October. This is the October low. Here's your higher low. Here's your higher low in December. Here's the descending channel that broke to the upside. Here's the downtrend that broke in the beginning of the year. And then this is the accelerated uptrend. Now in the past few days, we've had very tricky action because we weren't sure if this accelerated uptrend was going to hold. And yesterday, the bears had their attempt to break below this 130.60, 130.80, and there was no downside follow-through. Bulls came back midday. We closed the gap, closed pretty strong. Now we're opening right back in this range. So right now, this is the floor to trade against from the upper level. And then if at some point in February, if this does break, we'll see where this more gradual uptrend comes into, but there'll be a time and place for that. For right now, we're still intact and we still look very constructively bullish.
So what's your strategy? Because you were long, you had some hedges on. What are you doing now? We also had that golden cross that was all over the map yesterday, bullish sign for a lot of traders.
Well, first let's talk about the golden cross. The golden cross, people are saying, is the holy grail of a bullish tape. What it means to me, it's just another piece of the puzzle. It's just another constructive scenario that puts the bull case back on track. The 50-day is now above the 200-day, which is the way it's supposed to be in any type of constructive bullish move. You're supposed to have the moving averages in order. That shows you a nice methodical constructive tape, so I think it's important. Now, as far as how I maneuvered, yesterday I had tier 2 diamonds and tier 2 VIX on because I felt as if we were going to have a short-term pull-in. And in that down move, I covered half my diamonds, sold half the VIX, stayed with some of my longs, also got stopped out of some. So at this point, I'm going to stay with my bullish approach with multiple positions, but I'll keep half the hedge on and I'll just trade around it because you always want to be able to sleep at night just in case something out of the ordinary happens, which can still happen out of Europe.
And especially into earnings as well. So we wanted to highlight a couple of companies that are reporting earnings today or in the next few days to see if those represent some good trades. Amazon, of course, is the big one, reporting earnings after the bell today, has been suffering, really favoring growth in sales over profits, right? We're looking for 19 cents a share on earnings on a revenue of just over $18 billion. It's interesting, though, because I read a lot of articles that seem to say that they're diversifying into so many areas, right? The Kindle Fire competing with Apple's tablet. We have the streaming Prime now, which is competing with Netflix, shifting into cloud services. Do they have their hands in too many pots to be able to really focus on their core business? Also, if you look at Amazon's return on invested capital, fell 16% in the first 9 months of 2011. I don't think anyone likes to see that.
No, and I don't think they're going to get a pass again. In the last 3 to 4 quarters, they got 2 passes. One, when they were building their service centers to keep up with their demand. We opened down and then the market went positive with it. Last quarter, they missed and they didn't get a pass. If you look here at the chart, you will see last quarter, we gapped down right here, tried to come up and fill it, and when it couldn't, you had a big move lower all the way down to 170. So as you said, with every, with their hand in so many different, pots, or so to speak, are they ready to start firing on all cylinders to beat on earnings to get back its mojo? Because it's trading at a PE above 100. It's not cheap. For me, I've been doing a lot of options plays into earnings. I'm going to avoid this one. I'm going to wait for earnings to come out after the close. And if we could trade above 196 and hold above it, perhaps we get a move to 210, 220. If they miss and they hover and close below 170, it could see more downside.
Now, if you're a longer-term investor and you own it, you need to just kind of wait on the sidelines here and hold those positions?
Well, if you're in it and you're still in it, then you're in it for the long term. And if you want, maybe sell some in-the-money calls or do some type of collar where you sell some calls, buy some puts to have a hedge on, because this thing could move 6 to 8% in any direction. So just be prepared for that type of volatility.
Right, okay, let's go to some other names that have reported earnings today. U.S. Steel reporting a loss of about $1.57 a share. That was more than expected, but revenue beat just over $4.8 billion. Stock was up pre-market. Is this a good trade? I know you were trading it earlier.
We caught a cute little breakout above 29 for, I think 5-6%, and then into earnings, I don't take it. When they came out with numbers, I was like, you know what? It's not great. It's kind of lukewarm to the downside, but they're not expecting much in the stock. So if you look at the chart here where it is, it's basically at the lower end of this whole pivot, considering where it came from. I think that if they can't, break this lower, it's going to go higher, and I would rather be a net buyer today, thinking that this type of report is priced in, and ultimately I still think the stock can go to 33, 35. AKS came out with the same similar report, opened down, went positive, and continued methodically. I don't think it's going to be a barn burner, but I think that you could be a buyer into this somewhat lukewarm report and just have a bit of a longer term time frame.
And UPS also earned $1.28 a share. That was a beat by a penny. Revenue was a little light at $14.17 billion, but they guided higher for 2012. CEO saying expectations are for mixed economic growth in 2012, but a modest improvement in the U.S.
I haven't really traded this one, but I looked at the
it's
chart.
Pretty extended,
Yeah, it's near highs, so I don't know if this report's going to be enough, so I think you should take a little caution. If you look here at the chart, this is where it's come from. It's had a nice methodical move all the way back to the highs. I would say if you're playing this for momentum, above this, what is it, like 76.50, perhaps it could extend, but if it opens above 76.50 and comes back below it, I would take some profits and make sure to watch this uptrend here, because again, these type of moves into earnings, they better be awesome earnings, and that sounds good, but just not incredible. And
before we go to Exxon, also reporting today, want to hit on two that are reporting tomorrow. Las Vegas Sands, we're looking for a profit of 56 cents a share, which is about a 33% rise from earnings of the same quarter a year ago. Seems to be a favorite among analysts. We're looking for a lot of catalysts, a possible dividend rotation out of Wynn. We've discussed this in the last couple morning calls. Are you trading it before earnings? I know you were working it last week.
Last week was a few different trades. I actually went home long it into yesterday, and yesterday there was some kind of news out of Macau. It opened down $1, got stopped out, but I wasn't going to hold this stock long into earnings. I'm going to do some type of option play, probably from the bullish side. I'll see where it is tomorrow. For a long-term investor, I think you could hold this stock even if it's not great and you get put in the penalty box for another quarter. I do think if you look at this pattern here, short term, if you take a look here, you will see above this 50 to 50-50, it's going to break out. If you want to look at the monthly chart, it's been unbelievable. This is a high-level consolidation pattern. I mean, someone is making a big bet that it's going to go higher from here. Look how long this accumulation has been. So if you want to have this as one of your macro trades, I think it's okay, even if it doesn't come in and you need another quarter at some point this year. I think it finally gets above this 50 area, and you could see 65 to 80. So if you want to be long as a long-term investor, that's fine for me. Just in case it does happen this quarter, I'll take some in-the-money options.
All right, I'm going to go to Qualcomm, also reporting tomorrow. We're looking for revenue of about $4.57 billion. That's up 11% sequentially. Earnings, we're looking at 90 cents a share. Now, ARM Holdings just delivered a really solid quarter today, helped by exposure to Apple products, of which also Qualcomm can say that as well. So yes. I know you were trading Qualcomm as well.
Yeah, well, yesterday I bought the Qualcomm options. I saw it go positive. I saw some relative strength. I'm like, let me do half the options I want yesterday, and then right before the report, get to my full lot. It kind of feels like it's too easy that it's going to be such a great report because of Apple and this and that. So it's like known in the street.
It's also had a run too, right?
The chart looks great. It's right at the highs. But again, you look at this overall pattern here, lots of accumulation. So if they do perform and they come out with a good report, it's really set up for higher prices. You look at the weekly chart here, you will see, look at this accumulation here between 45 to about 58. You have resistance here defined right around this 59. So if they could deliver and they could up their guidance, you're going to see a breakout move, and this will be healthy for the market. So I'm taking a long bet, premium paid, not a huge one, but I'll be involved for those earnings.
All right, let's go to Exxon very quickly. Reported just in line earnings of $1.97 a share. What kind of levels are you watching with this stock today?
Well, I don't know exactly where it's trading now, but if it's just in line with the run that Exxon has had, I would be a bit careful. So, I'll go back to my desk. I'll talk to my radio. If you want some more color on it, tune in there. But if you look at the chart here on this, you will see that there is some support right around this 84. It came down from 88, so at least it came down a few days. But in line might not be enough for it to break it out above 88. Here's support at 84. Then you have another one at 81. So I would just be a bit careful here. Make sure you see what their guidance is. And if you're a long-term holder in Exxon, I'm sure you'll be fine. But as a short-term trade, it doesn't. I don't think that sounds just off the cuff like enough juice for it to break out to new highs for this year.
Right, and we're also waiting for the guidance to come out right now, and oil's up $1, so got to look at that as well.
Yes.
All right, we're going to be right back with some IPO names you're going to want to take a look at right after this.
Hi, I'm Sean Hendelman, CEO of T3 Live, where we train, coach, and mentor traders in order to help you put your money to work with confidence. The T3 Live approach is a blueprint for you to recognize, adapt, and ultimately take advantage of different market conditions. To begin your training with T3 Live, we would like to offer you the opportunity to enroll in our free 30-day online home study course. Fill in your name and email address, and I'll see you on the other side.
And with Facebook filing for its IPO supposedly on Wednesday, we wanted to look at other IPO stocks of 2011 to see if you can trade them now. Want to start off with LinkedIn. We could see a continued pop, of course, if Facebook values itself very high on Wednesday, as we're expecting it to. Are you trading it?
Yes, my whole group has been trading this. It's started to perk up in the last few days. I like the pattern here. It's been under accumulation, maybe long enough. You know that I like the art of the first few days of the IPO. That's different than after months of putting in the work. And here you go with LinkedIn. Nice downtrend to watch here. This was, the high from the IPO. This was that high in the summer, lower high. So it's coming up to a major downtrend here. 2 days ago, woke up, was a nice little trade above 75. I do think if it gets above and stays above this 77 area and gets through this 80 with any type of big volume, you could see it move to about $90 pretty easily on the Facebook hype of the ride here.
And is Groupon, I guess you could argue that's social media or not, right? Partly it feels like it's social media, but is Groupon seeing the same kind of juice? It is seeing increased competition.
Yes, Groupon was a big-time disappointment last year. I know guys looked at it the first day. It failed every one of my categories for the art of the first few days of the IPO, but it's got a downtrend that's trading again. So if you look here at the chart, it's a little bit interesting. I tried a little yesterday. It didn't really work. You have this downtrend right here. If you take a look at there, here's your high, another high. Got crushed, came back up, retested it, made a higher low, and now it's edging right around here. So I think if it does get some kind of volume, some kind of hype, above 2060, it could be good for a trade back to the 23, 24, but this stock fundamentally has a lot to prove, but technically it's got a downtrend, so I'm going to watch this to see if we can get above this maybe 20 and a quarter to 2060 for a pop.
This is another business that Amazon's trying to get into too, so maybe listen for signs of that on the quarter. All right, Zillow has been seeing some big volume. We're looking for a bit more of a big breakout here.
Well, a lot of people talking about how housing is getting a bit better. It's a housing website, so maybe their traffic's going up, or it's a little bit more than that. I don't know the specifics, but I also looked at this pattern. Big downtrend here. Typically, the best winners you have are usually IPOs from the past 3 years because they're innovative, they're young, they have small floats. So that's why I try and look at these things to see if we could have candidates. So I'm not saying Zillow is one of them, but as a trade, if you look here where it opened up, this was horrendous. But now, you do have some kind of, downtrend here. I don't know if I drew this exactly right, but, it's coming into an area. So I would say if it gets above this 30, it could open the door for a move back to this 35 range. You do have now 1, 2, 3, 4, almost 6 months of accumulation here. So at least you have levels to trade against above 30, perhaps 35. Some volume came in a few days ago. So this one's on the map. And
not to mention the fact that if housing is getting better, as we've seen the home builders do really well in the last 4 months, if Zillow does play catch up on that fundamental thesis, perhaps as well.
I 100% agree.
All right, Pandora. It has seen a January rally, but not really been able to regain any IPO glory here.
Yeah, and this one too was a pretty unsuccessful first few day trade. LinkedIn really was one of the, was it even LinkedIn last year?
Yeah, last year.
LinkedIn was awesome. Yeah, the first 3 day strategy worked perfectly and then it sold off. But I'm looking at this pattern, I'm seeing a lot of similarities that I just saw in the last few. So if you look here, you will see, this too is coming into, a pretty big level here, a pretty big downtrend. You could draw it a few different ways, but it did have a wake-up call right around this 11. Now it's coming into this 14. If this were to get above this 14 with big volume, and you saw some volume come in, a few days back, let me give you a little closer look here. Whoops, that's too close. You will see that this 14 is a pivot. So if you shorted it here, and then it came back up and shorted against a downtrend, and you're still shorted, I'd be a little scared, considering that above 14 you have 16, and above 16 there's room. So these are all considered somewhat air IPOs, and I would say concept type plays. So technically they look like they could be trades, but fundamentally make sure you track some of the quarters to see if they could actually perform before you think they could be long-term big-time movers.
Let's just sneak in one more. It's not a concept IPO. It's Dunkin' Donuts.
There you go.
Up over 10% for the year. We got earnings coming out next week. Dunkin' Donuts expanding outside of the U.S. using franchises to do that, which makes it cheaper for them. Can the stock perform?
I personally love their iced coffee, and I think it's an unbelievable business model. This, to me, has more of a nuts and bolts type feel, where they're going to have earnings. They're going to open up all these different, operations of Dunkin' Donuts around the world. So at some particular point, it's going to go. For any of you who want a longer-term play, I think there's enough time being put underneath the surface here. So take a look. Here's the chart. Another one that has a nice little downtrend, right? So obviously, these are key inflection points. Here's your high. Another lower high. Now it's nudging right up around this 28. So, there's an interesting trade here and investment. I think if this thing gets through 28 on big volume, you're going to have a move above 29, and then at some particular point, it's going to test the IPO high of 32. But at least you know what your risk is. Your risk is 24. So I think if you want to be an investor and buy it around, this 27-ish, you have a $3 stop and what could be a few-year hold that could take it above the IPO high and perhaps 40, 45 bucks.
Okay, we're running long, so let's see if we can do 5 stocks in 2 minutes. Netflix eked out a gain yesterday, but bumping up big resistance. How are you trading?
I sold my long in Netflix yesterday. I actually tried for a cute short. Didn't work great. It's up a little bit today. I would say, at this point, if you've made a lot of money long, which we've been all over this since around, 75, I would be a seller into here. And then maybe you get a cute fade on the open from positive to negative if you see a negative divergence.
All right, Microsoft is heading higher. Where's the resistance?
Microsoft resistance, I got to take a quick look. We talked about buying it in this flag, and it still looks good. Look at this. This actually was this thing gets above this little flag here. Microsoft's going to be above 30 before you could blink.
And First Solar down almost 4% yesterday. Would you be shorting now?
First Solar did a little bit of a push-through failure. A lot of guys have been trading this for the past 2 weeks. It's been a great short squeeze. I think yesterday was your day to sell. It needs a little bit of time to reconsolidate.
And Goldman, same thing, all down about 2%. Is it losing some steam?
I got stopped out of my Goldman. I'm going to look at it again. It's still flagging. It's still really above the macro support. So if you want to take a look here at Goldman, it's still above. I was saying 106 is important support. I don't know why it was just so, I can't say little girl because
that's super insulting.
Super insulting. I don't know why I was so hesitant yesterday, but I got out yesterday. But I will re-enter. I think in the 110 area you could re-enter above the Friday's high of 112. You could still see 116 on this one if the market stays in stride.
Wrapping it up, got to go to Potash. Got a downgrade today from Goldman Sachs to neutral from buy. Target remains at 48, which is pretty much right around where the stock is trading right now. Is it a trade at all?
I think some traders might look at it because it's been downgraded, I think, 3 to 5 times in the past 3 weeks, and it still goes higher. Same thing with Jill's unbelievable call with Mosaic. It still heads higher. They're both up like 10, 12% for the month of January. I think, it could continue higher. It's just not going to be a barn burner. I know CF was upgraded by one company, downgraded by another company. So the ags, you really need to have just a longer-term time horizon, and it's a tricky trade, but maybe it goes positive
I think
today.
Goldman Sachs actually upgraded CF. So there you go. And Jill has been all over this trade. All right, that's it for us for today. Happy trading, everybody.